fruition, and what timeline?
It's a 4-year horizon, and I think that it's going to take time for the factories to be built, things of that nature. And a lot of what we're talking about is Apple spending money with suppliers, and the suppliers are US based. So if you look at CapEx for Apple, they talked about it increasing to $3 billion a quarter from $2 billion a quarter, but that's much less than Amazon that went to $30 billion a quarter from $25 billion. So a lot of this is Apple spending with its suppliers, having more of its suppliers US based or sourcing from the US.
My head's spinning, Tom. Honestly, for a company like Apple, not only are they dealing with tariff threats, where they're going to manufacture the iPhone, but they're also dealing with artificial intelligence. How do they get a leg up at a time when Samsung is in some ways ahead of them? And then what do they do with their presence over in China, given that that relationship between the U.S. and China is fraught and continues to be? How do you put this together? What is sort of the tell when it comes to Apple and whether they are moving forward with a longer-term strategy to maintain the dominance that they have over the smartphone industry?
The historical performance of Apple has been fast follower. They weren't the first one with a smartphone. They were the best. It isn't clear that they'll be the best in artificial intelligence, but they are making steps. They clearly fumbled the football. But they're trying to address that. They talked about ramping that investment spend as it relates to artificial intelligence. We now have a timeline, a new timeline for revamped Siri enhanced by artificial intelligence next year. And surprisingly, they opened the door to potentially a large-scale acquisition to advance their efforts in AI. They hinted at that on the earnings call, which historically is not really something in their playbook. So they're trying to address AI to hopefully improve their situation over the next 12 to 18 months.
Before we let you go, Tom, if you put it all together, do you still see the U.S. as being dominant when it comes to the forward look of artificial intelligence and how quickly it's adapting into the economy? Or do you see, especially with some of these deals that are going into effect between the U.S. and China and internationally, other pockets of advancement, particularly in China, that seem to be superseding what's going on in the U.S.?
Yeah, so I definitely think when you step back for a minute, you look at OpenAI versus DeepSeek and things of that nature, it's certainly a very significant AI competition between the US and China. It isn't clear today who will ultimately emerge as the winner. The good news for the US is we have a lot of large multinational firms that are very tech proficient: Apple, Google, Meta, Amazon. So I think that bodes well for the U.S. in this long-term AI battle between the U.S. and China.
Tom Forte of Maxim Group, thank you so much for being with us as we try to understand the myriad storylines that seem to be filtering into the big tech story. The latest coming this morning with an investigation into Intel. I want to go back, though, to what Mandeep Singh said when we started the conversation, and he said, if you want to bring manufacturing back to the United States, you need Intel, given that it has the foundry, and it takes a very long time to build these.
It takes an incredibly long time, which is what we saw as well under the Biden administration with the Chips and Science Act, realizing how long it takes.
Let's see what's happening for
grants
today.
And incentives coming out of Washington to actually get
We've
shovels
just
in the ground. That is why there has to be things like exemptions, and that's why the market is seeing through this shock and awe 100% tariff rate the president announced yesterday.
We've got initial jobless claims
all in the United States
coming out in
in
4 minutes. Okay.
Yesterday's 5% gain.
For me, the dollar looks kind of strong today.
Was just talking about across
Right.
the board, you are seeing strength.
Obviously,
Coming up, we're going to be speaking about U.S. jobless claims. That will be coming out in about 5
at this
minutes.
point, yeah, guys, if we want to see the dollar gain some strength from here, okay, we kind of want to see a move, you know. We want to see an hourly breaker structure. We want to see a 4-hourly breaker structure. Pardon me. Like, essentially, what I would actually really like is if this 4-hour candle can take out this high here. Right? If you look at it right there, if we can push above there, then we can look for a potential retracement, right? And as price is going up, then look for an entry on the lower time frame, maybe a 5-minute, maybe a 15-minute. Then we can target these other highs up above, right? We can target Tuesday's daily high. We can also potentially, you know, go for the overall swing high, because I do think the dollar is on its way up, right? At least for now. I think last week's high at least if we can get to 50% of that weekly candle's wick. So what do I mean by that? So if I measure out from here to there, yeah, so if we can get to around 99, let's just say 99,400, right? So around 99,400, I think that would be a pretty good target, right? But at least for the time being, I think this looks really bullish, guys, to be honest, especially looking at how this morning started. Okay, so we've got the Tokyo model, right? We have the low, okay, we have the low, we have break above the low, we had a pullback, we had a continuation higher, we've had a pullback, right? If you turn over to the 15-minute, you can see that we had a test here of this 15-minute time frame candle, right? Then we've had a new high. From here, we've then rallied to take out the opposing Tokyo ranges high, right? So to me, yes, we can definitely head down lower, right? There is a potential for that, especially with the high impact news coming, but I would like to see the dollar pull back and let off some of that steam. That's what I'm anticipating, you know, that's what the daily structure is showing me. We've had a breaker structure on the daily. We need to see higher prices. If we look at this from a swing perspective, we've come to the sweet spot, 71% retracement. Everything is quote unquote lining up, right, for now. So that's what I'm going to be working with. Even if the news does spike us lower, I'm going to anticipate this actually heading higher. So with that being said, it probably makes sense for us to see a positive initial jobless claim. The previous was 218K. The forecasted is 221K. So unemployment is higher, right? That's what they're forecasting, unemployment to be higher. So let's see. Trump's also speaking at 9 p.m. GMT, so that should be a little bit interesting. So for those of you that are, you know, trading, probably not a good idea to hold any trades past that point. Right, so for gold, gold yesterday we were playing out this 15-minute candle. We just didn't continue higher, right, which is perfectly a-okay. However, if we look at gold, if we look at gold on the H4, to be honest, I don't like this gradual push up. It's almost as if it's leaving us a nice little trend line. I want to see like a really aggressive drop, but we'll see how that plays out, you know. But for now, we'll just have to keep playing gold. If gold wants to head up higher, then we'll just keep going for gold. But to be honest, as you guys know inside of my Discord and Telegram, I have been looking at the stock market a lot more. We'll come back to that later though. So jobless claims is here. I don't know why Bloomberg is behind.
We do get confirmation of the unexpected weakness in last week's jobs report. Right now, we do see markets rising, futures higher, although off earlier highs. And notable, the Russell 2000 now up by just about 0.9%. You could see in the bond space a little bit of yields rising as people look to a potential inflationary pressure. Right now, let's head over to Michael McKee with those jobless claims numbers. The expectation is for 222,000. Mike, what are we looking at?
226,000, so very close. At this point, it doesn't suggest any kind of massive layoffs are underway. There's been a big question about what's happening in the labor market, and obviously a lot of Fed officials made nervous by the low job creation last week. But so far, we're not seeing the converse of that, companies laying off anyone yet. Continuing claims rise to 1,974,000 from 1,936,000. And last week's initial jobless claims headline number revised up by 1,000 to 219. So very much stable in that area. The other numbers out this morning, non-farm productivity rises 2.4%. That is more than the 2% anticipated, and it is after a 1.8% decline in the first quarter numbers. The 2.4% is a second quarter number, and it comes in after the first decline we had seen in non-farm productivity in some time. The issue here is important because there have been people suggesting, there's an argument being made that the economy can withstand a little bit higher higher inflation because AI is pushing productivity up. And that may be the case. We don't know exactly why it went up, but it did go up significantly for the second quarter. Unit labor costs restrained 1.6% after rising 6.9% in the first quarter. So overall, a fairly good news portrait of the economy this morning.
Michael McKee, thank you so much. Stay close. We will get back to you. Right now, seeing not a lot of movement in markets. On the margins, yields lower just by a couple basis points, particularly at the long end as people look to continuing claims. Just to give some size and scope, the continuing claims number came in at the highest level going back to November of 2021, a significant bump up with a question of this low churn dynamic. People low hiring, low firing, but if you find yourself out of work, it is taking a lot longer to get back into the workforce. Joining us now is Yelena Shulyetiva of the Conference Board. Yelena, just on that point, how much is this indicating some sort of weakness, the idea that it is so difficult for people, or more difficult, I should say, for people out of the workforce to find their way back in?
Look, the data this morning actually shows the same kind of thing that it's been showing over the last several months. The insured unemployment rate remained at around 1.3%, and that's where it's been over the last several months. So we have seen a little bit of a pickup from the trough, but the idea is that there's not been that much upward movement in the unemployment rate, despite the fact that the pace of job creation has slowed. And that's the point that Chair Powell made.
Kay Moore was just talking about the fact that is the labor market frozen or actually deteriorating? What do you think?
I think it's frozen. So a couple of things to mention. So if you look at the data from the employment report last week, you'll see that the increase in the unemployment rate since its trough back in 2023 has mainly been driven by people's inability to find a job.
Prices
so kind
continuing
of
lower off the back of that
and not by
initial claims
so that's
data.
Point number one. Another thing is that
it's not looking too great, guys.
We saw a release of CEO confidence report for the third quarter of this year. That is in conjunction with the Business Council and the Conference Board. So, CEOs are feeling a little bit more optimistic. So confidence among C-suite, actually increased in the third quarter after collapsing in the second quarter. But CEOs are still citing difficulty finding qualified workers. What it means is that they will probably not be laying off people unless it's absolutely necessary. So that's what we hear from them. One thing is that, CEOs mentioned that they may be reducing the labor force, and that share of those CEOs exceeded the share of CEOs that were expecting an increase in the labor force. But still, the majority of CEOs are expecting no change in the labor force. It's still fresh in their memory after the COVID recession that when they laid off a lot of workers, they had a huge difficulty hiring them back. And while the circumstances are different now, you still have a reduction in the overall availability of labor among immigration slowdown. So
dollars is still dropping.
Creating,
from what I can see across the board, if you haven't taken a trade in the morning, right, you're not going to find a trade until a little bit later. Right, gold's already on the move.
Or is it because
gold's
what's
already
going on in AI?
pushed up.
Well,
Dow is kind of ranging. SPUs is kind of ranging as well. Take a look at the NAS. It's okay on the NAS.
So
GU's already pushed up from the interest rate decision as well. Money day gift. So yeah, right now
that's where you go.
we're just on the sideline.
But I don't think that
hopefully we get something a little bit more later on during the day. That's what I'm anticipating.
Look at unit labor costs,
and we
so
can
they are
work from there.
decelerating. Growth in unit labor costs, another data released this morning. You see some deceleration in that metric, and that tells you that labor is getting, well, at least not more expensive in that sense.
Yelena, one thing that we kept hearing this week, including from Stephen Oth of Federated Hermes, was that a lot of the hard data is backward looking and that actually a lot of companies have more confidence now. They have more certainty. The uncertainty was paralyzing. Now that is lifted just a touch. And you can see a better path forward, that actually you are seeing confidence start to pick back up and that maybe things are turning in the other direction. Do you see any signs of that from where you sit, that that's actually what's going on?
Yes, we do talk to a lot of CEOs at the conference board. And again, the latest report on CEO confidence is actually telling you just that. So it collapsed, confidence collapsed in
What's
the
happening,
second
Gift?
quarter of the year, but it
I'm not too
recovered
sure who else is on the
substantially
stream, but
in Q3.
welcome.
And that report covers
Are you guys in
the
any
period
positions at the
of
moment? Any
the second
trades?
half of July,
Let me know.
essentially. So when we were getting a little bit more certain about the level and the ultimate size of tariffs. So now we will be pricing out some uncertainty, but also we need to price in the size of tariffs themselves and the impact of tariffs on the economy. We estimate the impact from tariffs on economic growth will be substantial, but at the same time, uncertainty impact was also very, very sizable, and that's not going to be in the cards anymore, at least not to the same extent. So I think there is a potential for some revival, even in the pace of payrolls going forward. So maybe the latest data reflects some of this uncertainty that we had early in the year, and companies can kind of start planning ahead with a little bit more, precision.
And we certainly have seen that in the confidence data, just a touch higher as people take a look at what the landscape is right now. Yelena Shulyetiva of the conference board, thank you so much for being with us. Michael McKee is back with us. Mike, you've been scouring through the data.
Oh, look who it is. Courtney. What's going on, girl? How are you?
10-year yield on the screen there.
Hey, I'm in nothing yet. Good to see you again. It's been a while, lol. Yeah, it has. How have you been, Courtney?
Letting people go.
Wow.
The real question
it's been a
now
long
that they
while.
know what the tariffs are and the tariffs are
What's
in
been
place,
going on?
and they start figuring out what it's going to mean to their bottom line, do we see that change? And that's
How about you, Gift?
Part where the Fed is watching very closely and kind of holding their breath. But on the other side, we do have these good productivity numbers. Manufacturing productivity was up by 2.1%. Durable goods manufacturing 3.3%. So some strength in manufacturing productivity, which is a good thing for overall growth, but it does maybe mean that companies don't need as many people. So we'll see how all of this plays out going forward.
Yeah, Mike McKee, thank you so much, as always, as people try to understand exactly where we are in the economic cycle. Joining us now, Seema Shah of Principal Asset Management. And Seema, thank you so much for being with us. You put this all together, and I guess, what do you get? I mean, now that we have tariffs, we have more certainty, we are seeing kind of a pivot point. At least that's what some people are saying in the labor market in the U.S. How much are you shifting your view heading into fall?
Hi, Lisa. I think there has to be some reappraisal after the payrolls report last week. I don't want to put too much emphasis on it at the same time. So clearly the payroll report was very disappointing. Those downward revisions, very meaningful. But at the same time, we have been warning.
Gift took a gold buy scalp earlier on
was likely to fall.
On the FTMO demo counter. Okay.
Level, which
That's
is kind
cool,
of
bro.
where we got to for
guys, if you're on the live stream right now, don't forget to leave a like on the live stream if you're new, subscribe as well. We are here, we're looking at some of these pairs. To be honest, the main target is going to be on the DXY and the Dow Jones for today. Okay, so we'll be here for quite some time.
But I have to say, I don't think there's going to be much need for really aggressive rate cuts because
we've got some old friends, some old members. Courtney, it's been a while.
So I think from a market perspective, this is fairly.
Guys, if you're in the live stream right now, don't forget to come say hi, man.
Without a really, really concerning deterioration in the economy on the way. But of course, I think there's still a ton of uncertainty within the market to come.
Seema, is September for you a one and done, or is it sort of a cycle?
No, I don't think it's a one and done. I think I think we should see a couple of rate cuts. In terms of the timing, a lot of it is going to depend on how the CPI reports perform as well, of course, the employment reports. But we are expecting 3 to 4 cuts. That is not that meaningful, but it's also very, very helpful for financial conditions in an environment where the economy is still, it's slowing, but it's still fairly robust. So I think for risk assets, for earnings growth, this is actually one of the reasons why you see the markets actually react pretty well this week to the news that we had on Friday last week.
You mentioned a number of Fed voices now coming up, lining up with the 2 dissents we saw in terms of talking about the cracks in the labor market. But what if we get hot CPI reports, especially since the tariffs, as of today, the higher rates actually take effect?
It has, Courtney says it has ING sells maybe depending on how the dollar moves. It's been a long time. I had to take some time off. I'm back. Good to hear that you're back, Courtney.
Having seen those kind of
taking a break is absolutely A-okay.
Is being put on them from the White House. It's going to be very difficult for them to avoid it. Now, in terms of how they proceed from there and how many rate cuts are going to be coming, that's where the CPI inflation.
Okay, yeah, because even for me, I'm quite bullish on the DXY, right? Well, at least not right now. But I am bullish on DXY, so I think the likes of EU, like for example, this 4-hour candle on Euro USD, if it can close beneath, I think there's a really good chance that we might head lower on EU. For GU, it's a little bit more tricky because, to be honest, GU can head up just a little bit higher, right, before potentially giving us a short. But ultimately, it all comes down to this bad boy, the DXY. So, you know, like I said, we're just kind of looking for it to head higher. It's not giving us that picture right now, but we just got to wait. Gift said he got into a scalp earlier, nice.
When you're looking at an earnings picture, the US does look pretty strong. But even if we're looking across to Europe, to the UK,
I'm going to look at the Dow, and I've been enjoying trading the Dow as of recently.
But we can see that the tariffs.
But to be honest, the past 2 days, the past 2 days, you know, analysis, bias, everything was correct. But then we just chop. On Tuesday, no, I traded it Monday, had some good setups on Monday. Then on Tuesday, had some good setups. Some hit break even on this pullback, had to hold. Woke up, profits, great. And then, when was this? This was yesterday. You know, we pulled down a lot deeper than before. I was anticipating some shorts, but then I saw the S&P was holding bullish. Obviously, as you guys may or may not know, that the S&P is kind of like the DXY for the stock market. So if the S&P is holding in one direction, then it's definitely going to pull the rest of them in that exact same direction. Do you understand what I'm saying?
Around alternative asset investments and retirement plans. And Firefly Aerospace priced its shares at $45.
So that's the plan for that. So right now we'll just see how it goes. But yeah, let me know how the trade goes, Courtney. I'm sure you're still in the Discord and Telegram as well. So, and guys, if you have any setups, put it inside of the Discord. Let's have a conversation.
Thank you so much, Yahira. Up next, setting you up for the day ahead. Plus, Tom Orlik of Bloomberg Economics on why getting lower rates may take more than appointing a new Fed chair.
To be honest, the main reason why I chose today is because we had the initial jobless claims data, right? So I thought today was going to be the best day to find, you know, moves, and price is going to be moving a lot more. Let's just say have a lot more energy than what it is currently, but it's fine. We'll give it probably another hour and a half. We'll go to about 3:30ish, maybe 4. Right, see if we can get a move, because as of lately we've been getting moves later on during the day. The picture's just taking longer to develop, so we'll see how that goes. Bum 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 bum. Courtney says, you took the words out of my mouth. I wanted to ask you generally because I noticed it's as if the kill zones have changed by an hour or so. Yeah, so obviously, you know, our whole thing is to adapt to, you know, current market conditions, and there's just periods of time where market conditions are just going to behave slightly different, right? Depending on the season. This is why for me, summer period, I'd rather not. Do you understand? That's why I took such a long break earlier on, because this summer I just not a fan of summer period. It's not really my thing.
But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of power.
There's definitely, as the seasons go on, guys, there's periods of times where you're getting moves during New York session, and then you get moves during New York PM session. At the end of the day, the aim of the game is to set alerts, have your criteria, have your POIs, your point of interest, wait for them to head into that area, wait for your confirmation, and then execute. You know what I mean? So sometimes that might take a while, you know?
You need a variety of data points that all kind of...
How have you found trading GU as of recently, Courtney? Has it been good?
And so, yeah, maybe in this environment, we need to look at a few more alternative data points to try to enforce what we're looking at. But I think also what we do need to be prepared for is more volatility in the data.
That black box is getting a little bit darker as we look forward into a very cloudy future. That was Kelsey Barrow of JP Morgan Asset Management. A cloudy future looks bright if you're in the market. It's got futures higher on the day, going into the open up 0.6%, led by big tech, and we have seen that for the past week, as you do see some sort of reprieve, or at least perceived reprieve, when it comes to the potential semiconductor tariffs. We do see a little bit of dollar weakness, although today changing that a little bit on the margins. Euro dollar 116. Just basically flat. Yields just basically flat also after the jobless claims. Less than an hour away from the cash open. Here's your morning movers with Danny Berger. Danny.
Hey, Lisa, your future might not
be so bright. Courtney says, I love it. It's my favorite pair. I think when it's clean, it's very clean. But most of the week, I didn't engage. It was sideways all week, in fact, until today. Okay, fair enough. Yeah, it has been a little bit sideways in terms of like its climb to the highs. Obviously, if you weren't involved, I think Tuesday was probably the best day. Yesterday wasn't bad as well, but I think Tuesday was optimal, right, for an entry. Because even when I looked at EU, Tuesday was also the most optimal day. It was a really nice setup here, right, like down here. But yeah, I used to be quite heavy in GU, man. I had to let it go. I had to let it go.
For example, who makes the glass for iPhones, that rallying. Global Foundries, a U.S.-based chip business, that also rallying. Notably absent from the chip makers rallying this morning is Intel. It is hurting after Trump posting on Truth Social that its CEO should resign. Don't have shares of those at the moment, but I can promise you they're falling something like 5% this morning. Tom Conton, the center over there, saying, writing to the board, saying that they should look into the CEO's ties, Lisa.
Thank you so much, Danny. Right now, counting you down to the opening bell. Here's a trading diary for the rest of the week and into next. 10 a.m. Eastern, Atlanta Fed President Raphael Bostic speaking. 1 p.m., the Treasury auctioning $25 billion in 30-year bonds. 4 p.m., we hear from President Trump delivering remarks. Next Tuesday, this is really going to be the big data point, CPI data. Thursday, PPI, and another round of jobless claims. President Trump continuing his push for lower interest rates, blaming Fed Chair Jay Powell for getting in the way. But a new book raises questions about how easy it'll be to get lower long-term borrowing costs, regardless of who's at the Fed. Tom Orlik of Bloomberg
At the end of the day,
Economics, one
it
of the
depends
authors
on
of
your
The Price of
personality and
Money,
what
joins
you
us
are
now.
looking
Tom,
for.
thank you so much for
Right,
being
I
with
prefer
us.
things that
Why
move
is it
fast,
that
you
you
know.
think
I
there is a
prefer
new
pairs that,
structural
you
regime
know,
for
yeah, it might
benchmark
give me a
rates
bit of
that's
headache,
gonna
but
make
I
it a
know
lot more
if my
difficult to
direction
get
and my
them
bias
lower
is right,
over the
I
next
will
10
get
to
it.
20 years?
You know, I will get it. You know, for example,
So it's a great question, Lisa. So
Dow Jones
let's
yesterday,
cast
right?
our minds back briefly
My bias
to
was
the early
correct. Well,
2000s,
initially
to
it wasn't
Ben
correct because I
Bernanke,
wanted to short it,
and to the famous
but then obviously I
savings
saw the
glut
DXY, and obviously I
hypothesis.
posted in the
So
Discord
back
saying, "Hey
then,
guys, I've
the
got a
Fed was
bias change,
hiking,
right,
but long-term
to
Treasury
bullish."
rates weren't
And
going
obviously I
up.
explained my
And
reasons
Bernanke
why.
said, it's
Enter the
because
buy.
there's a glut
My
of
buy entry
global
was about
saving,
here.
all
No,
of this
it was
money
about
coming
here-ish. It was
from
on this wick
China and
candle here when it was
Saudi
coming down.
into the US Treasury
When I'm
market.
telling you,
And that
it was
means
looking
even
good,
as the
then
Fed
it was coming
hikes,
back. It was looking
long-term
really
rates are
good up
staying
here.
low.
Then it came all the way back
So the
down.
big thesis,
I ended up just
which
leaving my
Bloomberg
stop where it
Economics,
was.
my
Ended up hitting
co-authors,
stop before it went
Jamie
up.
Rush, Stephanie Flanders, and me
But that's fine.
set out in this new book, The Price
Yes,
of
Ritesh, how
Money,
you doing, broski? You
is
good?
that situation
Guys, if
has
you enjoyed the live stream
reversed.
so far, don't forget
We're
to leave
no
a massive
longer
like on
in
the
a
live
world
stream, yeah,
with a
guys, and
savings
subscribe if you're
glut.
new. If you have
We're
any
in a
questions,
world
put it
with a
inside of the chat
savings
box.
shortage.
Let's have a
And that
conversation.
means
Come
it
say
doesn't
hello.
matter
I'm
who
not gonna
President
bite.
Trump appoints as the next
Maybe a
Fed
little.
chair. He can appoint Kevin Hassett. He can
Maybe a
appoint
little.
Kevin Warsh. He can train an
I mean,
AI
gold, I feel like
model
because
to make
gold's
the same decisions as
gold's
Arthur
range is
Burns,
really high.
the
So
notorious Fed
even if you
chair
want
who
to swing it,
cut
you can.
rates for
If you want
Nixon
to
back
scalp
in the
it, you can.
1970s.
Right?
And
He
can get a
also I didn't
shorter,
want to be too
short-term
into
policy rate,
FX.
but that saving
Right?
shortage is going to
Because
mean
back
that
then I was just
long-term
solely
rates,
into
the
FX.
10-year
Like
Treasury
FX was
yield
my thing.
stays high.
But then obviously
We
it's good to
think
diversify, you know, to have
4.5%
commodities,
for the 10-year Treasury
to have
is
a
the
stock,
new
to
normal.
potentially have
Yeah,
a
something
crypto that you're
also the
looking at as
administration
well,
would not welcome,
because
'cause also I
liquidity is
see
going
you
to
say we
flow
might
from
actually
one
trend
asset
above that
class to the
figure.
next, right?
What does this look like in terms of
Liquidity,
the
most
transition
liquidity
for
might be in
4.5% or
commodities for a
10-year
period of time.
yield
Then
being the
it
new
flows to
normal?
cryptos. You know, when cryptos is really
So
jumping,
that's
right?
a great question,
Stock market and
Anne-Marie.
cryptos usually jump together.
So this
But then there'll
book's
be another
about the
time where it'll
natural
be
rates of
currency.
interest.
So I feel
It's a
like
bit
it's
of a
really good
wonky
to
concept.
dip your
It
fingers
fires the
into.
imagination of PhDs and the folks in the Fed. Can leave
I
others
feel like it's really
cold,
good to dip your fingers
but it's
into
actually
different
pretty important,
asset classes.
right?
But then
Will the
again,
US
it's
Treasury,
completely up to you, you
well,
know.
10
Whatever
years
works for
ago,
you works for
you were
you.
borrowing at the 10-year horizon.
There's no
with
one
a
size fits all.
2.5% rate. That was very sustainable.
Yes, Ritesh, I'm
Now,
good, bro.
you're borrowing at a 4.5% rate. Well, that puts us into a world where the US is going to be spending more on interest than it does on defense. If you're in the equity market or the real estate market, if you put money to work in stocks and real estate in the US, pretty much any time over the last 4 decades, you've made a lot of money. And an important reason for that has been that interest rates have been low. Well, if we're right, we're now moving into a world where interest rates are going to be structurally higher. And that means the pressure on stocks, the pressure on property isn't going to be for prices to rise. It's going to be for prices to plateau or maybe even fall.
Tom Orlik of Bloomberg Economics, thank you so much, and looking forward to reading your book, The Price of Money, which does come out today. Honestly, this is going to be the theme going forward, and frankly, a big discussion in Jackson Hole. Are we looking at a new, much higher neutral rate that really does challenge some of the pricing that we experience on assets?
Well, according to Tom and the team, we are, and that's the new normal for a very long time. What's interesting is he says it doesn't matter who the Fed chair is, even if it's someone so overtly political or someone who on the surface doesn't look political, but behind the scenes, like Nixon and Burns, actually is very political. It doesn't matter because this is the trajectory we are going into.
Yeah, or potentially it could exacerbate it like we saw during the Arthur Burns Federal Reserve. Coming up tomorrow, I will not be here. We've got Anne-Marie holding down the fort, Lori Calvasina of RBC joining, Neil Dutta of Renmax, Savita Subramanian of Bank of America, and Colin Martin of Charles Schwab as we look forward to CPI next week. A real question about whether you're going to see that ongoing grind of maybe slightly weaker growth, slightly higher inflation, and how much that does dovetail into Fed policy. Right now, still a real positive tone across the board in markets as people look forward to earnings that have been better than good, as well as the expected Fed rate cut that people are pricing in for September. Right now, we are seeing just a touch of a sell-off in
So
the
nobody
bond
in a
space,
gold
but in the
trade?
long
Not at the moment,
30-year
bro.
yields, just a touch lower
Not at the
ahead of
moment.
that auction later today.
Gold does look like it wants to head higher. But one thing I would say about this is look at how we're rounding off. Right? Realistically, when you look at gold, yeah, we had Monday. Oops. We had Monday,
For the future.
right? Tried to pierce the high, failed. We had Tuesday,
To the stars.
tried to pierce the high, failed. And we've also had another run today,
the politics that shape global tech markets.
and we failed. So it's like, you know, one high swept, second high swept. Are we going to potentially get another high sweep and a drop? To be honest, like, when I look at gold, I would prefer for gold to actually just come down. Like, we've got this, you know, all this liquidity resting beneath here. I want to see a nice solid candle, and if we can come down, work inside of here, right, maybe accumulate some longs inside of here, and then start to really rally higher, I think that would make a little bit more sense, right? But, you know,
I think she's a scam up to now.
obviously it's easier said than done, so
Getting ripped off.
Repeat after me. I am a winner.
but for now it's bullish,
I didn't know how
at least on the sub-hourly.
what I was getting myself into.
If you tell me you have a vision of being $1 billion,
Yeah, I think if we can pierce beneath those lows, I think we've got a really good chance
and if you're not going to do
to
that,
really go for it.
everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang. Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarte in Le Mans, and this is Bloomberg.
This is Bloomberg.
All right, we're hoping for a truce here, and stocks are showing a 30
Yeah, I was hoping for gold to drop back to 3,300. 3,300.
Right now.
Let me see what 3,300 is. Yeah, 3,300 is quite low, Ritesh. Fair enough. That makes sense. That makes sense.
And an exemption. President Trump
but gold never plays out the way you want. Yeah, gold's a hit and miss sometimes. Ritesh bought 33.75 for close of trade interest because I'm testing the FTMO demo account. Okay. Gift, you can trade news on the demo, well, phase 1, phase 2 stage, just not on the live account. Yeah?
Let's talk about one of those reports today. I'm not sure what this says about the
Or
economy
they call it live, but you know
the
one that you get paid from.
New weight loss pill that overshadowed otherwise strong growth from its current obesity medicine, which is an injectable. You can see Lilly shares down 7.5% pre-market right now.
I can't wait to talk about this story. We're also watching chip stocks. As I said, President Trump has threatened a 100% tariff on imported semiconductors if you're not building like $100 billion plants in this country. That would further upend a global electronic supply chain undergoing a seismic shift already following decades of reliance on on China. And the president telling the CEO of Intel, Lip-Bu Tan, to resign following concerns around his ties to China. As you can see, Intel shares, which have already been battered in a company which is a shadow of its former self, down another 3% today. Katie?
Let's wrap it all together now with Bloomberg Tech co-host Caroline Hyde, who joins us on set. So, Caroline, I want to start with Intel because Lip-Bu Tan, he only took the helm in March 2025 or so. Now you have the President of the United States calling for his resignation. As I understand,
all right, we are 28 minutes away from stock open. I think that's literally the only chance where if we don't get any action, we'll be done for today. So what I'm looking at for Dow today is what is price going to do here at this 15-minute, right? What lines up with this 15-minute as well? Okay, is this hourly candles high? But then also it's a structural high as well, right? So for those of you that, you know, have learned from me, you'll know about structural highs and structural lows, yeah? Sorry, structural levels, yeah, there we go. So we can see here, right, if we can get like a little pullback retest, I think we've got a good chance to get busy, to get really, really busy, guys. So I'll see what happens there. And also, of course, see what's going on with
of money coming from the US government, coming from the CHIPS Act to basically build manufacturing here in the US.
Ritter said left it open because Trump with his tariffs. Yep, that is true. Oh, so true, Josh. If I wasn't sure if my SL would be hit during the news, has breaching the account, they want to take any chances. Okay, cool. That makes sense, bro.
As well, that's right. You brought that up. That was something that Tom Cotton had been concerned about them pleading guiltily, as he quoted.
This Bitcoin trade was I mean, it gave headache, but it was a really good move, man.
To China, and of course,
it was a really good move.
The
unfortunate thing is, in my opinion, the actual entry for this,
President Trump
was yesterday, right? I should have been trading this instead of the Dow yesterday, but that's fine. And we had preferably the best entry was here, but then if you look closer over here, this happened, you know, 4 or 5 a.m. I'm not even looking at anything at that time. And then we had some this morning. I'm not really looking at markets in the morning as well. So, you know, I guess you could have entered off of this 15-minute imbalance to head higher. We had this equal high here, very, very nice equal high here, and we just exploded through it. So let's see what's going on in the rest of the market. ETH had a little bit of a pullback. ETH is already down 100%, so doubled your money. If you guys bought when I recommended, that would have been double your money. Well, more than double your money now.
But the questions still roll. How
yeah,
much
ETH is almost touching 4K again, man.
On its phones because they've committed
XRP,
$100 billion.
This looks really parabolic, you know, XRP.
But what of those iPhones that are still being made in India and the ongoing tariff concerns there?
The next main coin that I'm really looking at here, guys, to be honest, Cardano's a decent one, but
don't actually manufacture
for me it would be Algo, you know. I think Algo's got a really, really good upside potential, guys. So, you know, if you're not in Algo, my target is like 300% away. So 3x your money. If it's even a grand, guys, even a grand, yeah, no one is actually thinking about it. Guys, a grand, well, I don't know everyone's situation, but no one should be crying over a grand. Like a grand, you can recover from a grand. If you can't recover from a grand, then £500 or €500, $500, you should be able to recover from a €500 loss. You know, I know a lot of you guys buy FTMOs and whatnot, but again, you know, if you guys were paying attention inside of Discord when I mentioned that I've been looking at other investment vehicles, because at the end of the day, trading is great. Trading is great. However, there are easier ways to make money in this space than trading. In my opinion, trading is probably one of the most hardest ways you can make money in this space. I'll be honest with you guys. It really is one of the most hardest ways. You know, a really easy way is cryptos, just buying and holding. If it's not cryptos, then is the stock market. You know, I gave you guys this stock here, right? AVA. When Trump was, you know, initiating all of his war talks and blah 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 blah, right? I gave this to you guys. You know, even a couple of days went by before it actually started to shoot up. That's 50% at the tie, right? A little bit more than 50%, but you get the point I'm making, right? If you put in 500, right? What have you got? You've got 750. If you want to pull out at 750, or pull out your initial investment 500 and leave the 250 in there, you can, right? And then I think Curtis Wright Corporation. I don't know if I gave this to you guys actually, but I also got into a buy for this one. Tesla hasn't really done anything, to be honest. It's like 2%. I think I bought somewhere around here, some more. Anyways, but there's different ways you can do it, and when it comes to stocks, yeah, guys, because what I feel like a lot of people need to understand, or you guys need to understand, is because you're in the space and you're trading and you're looking at the unemployment rates, you're looking at the interest rate decisions, you can put two and two together and make an educated decision on how markets are most likely to react. And guys, it's cause and effect, right? It's common sense. Cause and effect. Okay, cool. Let me give you an example. If we drop interest rates, okay, what do interest rates affect? They affect mortgages, they affect loans, right? So they also affect savings, right? If interest rates are lower, what does that push people to do? The normal day-to-day people. It pushes normal day-to-day people to spend more. It pushes business to potentially take out more loans, right? Because the interest is going to be lower, and mortgages repayments are also going to be lower. So what they're trying to do is they're trying to boost, right, or increase spending in the economy. If spending is being increased in the economy, where is that spending going to? It's going to go to companies. It's going to go to businesses, right? So usually when interest rates come down, we usually see a push up or an increase in the stock market's valuations or in a company's stock, right? It's cause and effect, right? It's cause and effect. So if I understand that, and if we are currently going through a cycle, because remember, like, everything's a cycle. So weird, but everything's a cycle, right? We've gone through a cycle of high interest rates, right? And now we've come down and we're going through a cycle of, well, we're about to start through a cycle of low interest rates. And, you know, with Trump applying pressure to the Fed, and, you know, with UK dropping its interest rate as well, like, America's probably gonna drop its interest rate next month. It probably will. There's a high potential of it doing that. And once it does, what do you think is gonna happen to the stock market? Okay, remember, cause and effect. There's a likely or a higher probability of the stock market jumping, right? At least, even if it's just an initial reaction, right? There's a huge probability or a huge chance that the stock market is going to rise. Maybe it doesn't rise that same instantaneous day. Maybe it drops. But as you can, or as you should be able to tell, like, over the next month, over the next quarter, even if we do get a bearish sentiment and a bearish reaction to the market, but then the interest rates come down, then over the next 2, 3, 6 months, it should rebound. It should continue to push up, right? Because once the interest rate goes down by, let's say, 0.25 basis points, the next month it might go down by another 25 basis points, then another 25 basis points. Do you understand what I'm saying to you guys? So even with the interest rate decision for the pound coming down, what did we see here? Right, we saw GU push up. Let's take a look at the FTSE. The FTSE push up today. Doesn't look like the FTSE pushed up today. So it was around here. That doesn't look right. FTSE. Indices. No, it's saying this is the right one. Okay, cool. Whatever. The FTSE hasn't really reacted, at least for now. right? But like I said, over the next couple of months, over the next couple of quarters, how is that picture going to change over a longer period of time? And what you've kind of got to understand is, you know, it's a game of doubles, right? It's literally a game of doubles. My whole thing is looking for opportunities to double my money or double my investment. Even if you start with 500, even if you start with 1k, I would probably not even advise you guys to even trade that yourself. If you can first get yourself into crypto or get yourself into stock market using educated decisions, you will have a much better time, right? Because let's just call it a spade a spade. If you're on £500 or £1,000 account, you're not going to make crazy money. Unless if you're over leveraging. And if you're going to over leverage that money, you might as well just put it to something else. Right? Like, there are ways you can do it, but you just have to understand that it might just take, you know, longer than what you are anticipating. This looks good to push up again, you know, gold. So guys, remember, game of doubles, yeah? Straight game of doubles. How can I double? How can I double? How can I double? Because 1 to 2k, 2 to 4k, 4 to 8k, 8 to 16, 16 to 32. Now you're looking kind of nice. Okay, cool. I got 32. What should I do? Cool. Now that you're at 32, maybe instead of you going for doubles or 100x, you can now go for 1.5, right? Rather than 2x, you can go for 1.5, right? You can just go for a 50% return on a stock, right? Another stock, or maybe a crypto, right? If you're in solid cryptos, and even if you take a L or the crypto isn't doing well, just sit, right? I'll give you guys an example. I remember I bought some XRP. This was a while ago. I remember when I bought some XRP and it was on its way up, right? It must have been... Okay, here it is. Yeah, this was prior to... Yeah, here it is, here it is. I remember I bought some XRP, guys. And this was the back end of XRP. Back when... Back when Celsius was around and it was doing its nonsense. I remember I ended up buying XRP around here, right? I think it was around like 55 cents or something, you know. I saw that, you know, okay, cool. XRP is on its way up again. You know, I've recently saw, you know, the highs there, and the whole point was, look, if we can get back to this high. Oops, that's a bit high. If we can get back to this high, that's like 5x, that's like 6x, cool. So I dumped a couple of grand into XRP here. And then what ended up happening, you know, it was looking good, it was looking good, it was looking good until it wasn't. Until it wasn't, guys, you know. But at the end of the day, I understood this, you know, if I just give this enough time and understanding the utility of the token and understanding that, look, it's eventually going to go back up. And, you know, my main premise was it's still kind of semi-early days. It's not really early days, but semi-early days. And this is one of those big coins where everyone knows about, and I know money's going to flock to here, right? Even if I don't make 6x, 10x, I'm still going to make 1, 2, 3x, right? At least something. So long story short, this ended up coming down. Celsius ended up going bust. I had a lot of coins on Celsius, you know, then learnt my lesson on hot and cold wallets. you know. And the annoying thing is, in this space, sometimes you might have to take a lot of L's before you actually learn stuff that you probably should have learned anyways, which is why I always recommend to anyone to just get yourself someone that's been in the industry that can give you their experience and actually give you a shortcut. Because at the end of the day, if you don't pay for someone to show you the way, you will pay with time and you'll pay with money. So I don't know which one you prefer, but I know the one that I prefer, right? Because I could have avoided that. I could have avoided those losses if I knew about uh, cold wallets and putting it in a cold wallet, and I would still have all my coins. Long story short, they ended up like giving back a fraction of what was actually in. You know, I had Polkadot, I had Matic, I had hella coins in Celsius, and back then Celsius, yeah, guys, they were giving some ridiculous APYs, you know. And at the end of the day, that should have rang alarm bells in my head telling me, wait, why are their APYs so high? You know, I'm seeing 22% on some of them. I'm seeing 30 something percent on some of them. So you're telling me if I buy this and I leave it and I stake it, you're gonna give me 30% for the year? That's better than what, you know, some analysts are doing at large companies, right? Large investment firms. So I went in, and obviously lesson learned, but it's all part of it, you know. But yeah, long story short, eventually, you know, I held, I think it was over a year, you know. Eventually, you know, we started to head back up during 2021. I remember taking profits at like a $1.07, right before this started coming down, and then I noticed we had a break of this low, and I said to myself, okay, cool, this is probably gonna come back down. End up coming down, right, and then shot straight back up. I'm not gonna lie, I felt FOMO because, you know, at this point here, I thought there was gonna be another new leg, right? I thought, damn, this is actually going to breach these highs. Like it looked, right? Remember, markets like casino is gonna make you, it's gonna make it look like it's about to do certain things, but it doesn't really do it, right? This pump up here on that week, I got FOMO, serious FOMO. I was telling myself, damn, this is about to break all-time highs. We're about to head to $3. Oh no, I've taken out too early, blah 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 blah. But then I just didn't get it back into it. I just said, you know what, if it does that, it is what it is. I saw what I saw, and I took profits. And guess what? I was right. You know, eventually this ended up dropping a lot lower, and then I ended up buying some more at like 44 cents ish, right? Around 44 cents ish. I think I end up buying some more because at the end of the day, this is or was a long term thing. And then, you know, we kind of chopped and changed around, you know, the 30 cents all the way to the $90 mark. And then obviously recently we shot up, breaking all-time highs. Do you know what I mean? So it's even just that one short story alone, it's a journey, guys. It's a huge, huge journey. And understand that this was a much easier ride than it is doing this every single day, right? It's a much easier ride. Don't get me wrong. Yes, it takes time. But I don't want to sit here and say you're guaranteed profits in this route, but you will have a much easier time than trading on a weekly, regular basis. That's the truth. Right? Because think about it. That cycle of emotions that I went through, I felt it and went through that over a period of, let's just say, a year. Right? 365 days. Did I feel that every single day? No. I only felt it on the odd week or the odd day that I actually looked at the portfolio and saw how it was doing. But these emotions, you're going to feel it every single day looking at gold, every single week looking at Dow, every single week looking at GU, whatever you're trading, right? You're going to feel all those emotions I felt over a year every single time you look at the markets, right? So you ask yourself the question, right? Another thing that you're also going to learn is that there's cycles in the market, which I represented and said earlier. There are better periods to trade than others. I already said it before. Summer periods, you know, for me personally, summer periods are some of my worst. Some of my worst positions I'll ever take comes during summer period, right? I only usually get locked back in during September, right? September to December, the best in my in my humble opinion. Third and fourth quarter, in my opinion, is the best. And then you have that little bit between halfway, like the crossover between Q1 and Q2. So like around March, April. Obviously, there's the elections and whatnot, usually around that period. So, you know, things usually get more active then. But long story short, you kind of have to plan your whole trading around those periods of time and understand like, okay, cool, these are better times for me to be more invested in the FX market or more invested in certain markets than others, right? Then when we are outside of those periods, that's why I was looking more at the stock market, right? Looking more at individual companies and trying to find companies that have potentially earnings that are coming out, right? So companies that have earnings coming out, seeing how they're doing, seeing how the economy's doing, seeing how the US is doing. Toyota had their earnings report come out recently today. Like just stuff like that. I hope that makes sense to you guys. You know what I mean? At the end of the day, you guys know I'm always gonna try to give you some source, give you guys some value, each and every single one of the live streams. But that's what I would do, guys, and I urge you all to do the same. I might get into solo as well, guys. I feel like solo's got a really good upside potential. You know, 4x. If we can work inside this weekly imbalance, I think we got decent little opportunity here. But yeah, looks like gold is gonna head higher then. Okay, dollars actually heading higher finally. Stock market's coming really soon. Ooh, this hourly candle looks really interesting actually. Alright, I'm confident this will come for that high now. I'm confident we're gonna come for that high. Looks like EU's just pulled back, tested that half-hour candle. Yeah, that'll drop. Ba 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 da bum 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 bum.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
And this is Bloomberg. Alright guys, 5 minutes, 5 minutes, 5 minutes, 5 minutes till crunch time. We're almost there. Almost there.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Open Interest. We are minutes away from the opening bell. Here's your setup. Green on the screen all the way down. The S&P 500 higher by about 0.6%, building on that rally that we saw yesterday. Big tech leading the S&P 500 up about 0.8%. It's the small caps that are the shining star today. The Russell 2000 higher by about 0.9%. Of course, we'll talk about whether or not that will hold, and we'll talk you through all the opening action up next with Morgan Stanley's Mike Wilson after the break. Don't go anywhere. This is Open Interest.
Break down our capex into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until
Okay. 2 minutes, 2 minutes, 2 minutes, 2 minutes. 2 minutes, guys. Gold does look like it wants to head higher, guys, to be honest with you. It does.
Coverage and capacity, it's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
All right, stock market is here.
We're looking at gains in futures. Markets not deterred by the 100% tariff President Trump announced he may put.
We're jumping. Okay, cool. So what I like to do for stock market is wait for the first 15 minutes to pass. Obviously, structure at the moment on the hourly is bullish. On the H4 is bearish. Okay, right, from this high to this low. So we need to keep an eye out for this level here that we're very, very close to. All right. Daily structure is also bearish. Weekly is bearish as well. Okay, cool. So realistically, this should be coming down, but it is not at the moment. But it doesn't mean that it still can't come down. Do you know what I mean, guys? It's possible. So for now, we're gonna wait. I've got my alert set at this low. I've got my S&P over here. I'm gonna set some alerts for gold too. I don't really like the look of gold at the moment, guys. We've just jumped up right on the open on the GDX. So gold does look good to head higher. What else? Dollars is back down again, guys. Yeah. Dollars dropping back down as well. Got a nice little reversal here. But essentially, we're still inside of the range from the news release. So we're in prime time now anyway. So let's just give it 15 minutes and then see where we can go on from there. Gift says, on another note, bro, it seems like we're getting Cesco. I mean, why not, man? At least we're making moves, man. We're trying. That's all we can do. That's all what we can do, my bro. Do I have any faith? I don't want to disappoint myself, you know, bro. I really don't.
Get me excited because, you know, we've been waiting for this market.
I'm not trying to do all that.
When we saw the bank bonus story earlier this week, I noticed debt underwriting guys are getting paid, equity underwriting guys not so much.
Yep.
Is that going to change?
Well, debt usually leads, right? So, I mean, that's what's been going on. The private loan market's been very busy. You've seen a lot of recaps, too. So that's how it starts. And this gets back to our overall thesis, Matt, which is that, you know, we believe we've been in sort of a 3-year rolling recession, and that the end of that recession ended in April with the tariffs. That was the final capitulation. So we think that's a new bull market, right? We think the bear market ended in basically April. It was a pretty nasty one. There were several, you know, along the way, and that was
Ooh.
flush. And now we're in a new
Look at Dow, man. It's looking strong.
Activity is just
Take a look at this. 30-minute
analysis or that conclusion is probably correct.
It's looking strong on the Dow.
That seems like a pretty big statement. And what does that imply of what the road ahead looks like? I mean, you think about now through the end of the year, we've heard a lot of folks say that, okay, maybe we get it.
Ethereum just looks like it's about to really clap like 5K, you know. Like ETH looks like it's really gonna clap 5K. I'm not gonna lie to you guys. ETH looks like it's next to go.
2020, you know, that's probably when we were probably the most out of consensus bullish as we are live today, like on earnings. So,
guys, if you're on the live stream, drop a like on the live, guys, whilst you're here. It helps out the channel.
In 2020, it was a straight line up, right? Didn't really
and the YouTube algorithms. I mean, do you like Cesco Gift? I don't know. I don't think he's you know, he's that much of a game changer. Whereas, like, you know, I need to drop everything for. Yeah, he's a good player, but you know, United, we've always had good players. This hasn't turned out to be anything.
We think this is the best chance we could have for some correction or moderation, if you will. But I want to be very clear, it's still early in the new bull market, so you want to be buying these dips.
Well, and there is some frothiness, right? It sort of feels like silly season when you look at how much Mark Zuckerberg is paying people to come on to his super intelligence unit, right? $100 million bonuses. And then you get something like Palantir, which has forecast sales of $4.15 billion, and it's worth $415 billion. Like 100 times sales is pretty nutso, right?
Yeah, no, I mean, I think it'd be naive to sit here and say it's not getting a little frothy in parts of the market, but that's what new bull markets do, right? I mean, and even in existing bull markets, you get frothiness, right? Just like you get over pessimism in bear markets like we got in April. So I think it's part of the deal, right? And as investors, our job is to find good risk rewards, okay? And by the way, you know, a portfolio can have some speculative assets in it, right? It just shouldn't be 40% of your portfolio. And so, like, but right now, I'd say the risk reward.
Yeah, who I'm really interested in is Belabor. Do you know about Belabor? Apparently, Belabor is one of our targets.
These are areas that are continuing to show positive earnings revision breadth, and there's definitely still value in some of these pockets.
So we were talking about froth. Remember, we had meme mania reignite just a couple weeks ago, which definitely was a sight to behold. When it comes to this new bull market that we're in, what do you need to cooperate? I go to the bond market, for example. I see 10-year yields at 4.23%. We had been hanging out around 4.5%. It seems like we've reset a little bit lower here. Are these the levels broadly that you need long end yields to stay in for this bull market to really flourish?
Yeah, 450 has been the level we've been talking about for several years. When you get above 450, equity multiples don't particularly like that. So 423, it seems like we're in a fine zone. I think to continue the bull market, you need the things you need, the ingredients you need is positive rate of change on growth. Okay, we have that from an earnings standpoint. And you have policy that isn't inhibitive, right, or inhibiting that growth. So both fiscal and monetary policy looks like it's okay. And it appears as if the Fed, maybe they're not going to cut in the short term, but all signs point to the next move will be a cut. So you have supportive policy, you have positive rate of change, you have good flow dynamics. I mean, those are all the ingredients you need.
We had a chart on Bloomberg Intelligence earlier this week showing second quarter earnings expectations, and it's pretty amazing. You may have seen it. It just starts to come down at the beginning of the year because we were so pumped up, right, for Trump 2.0. And then after Liberation Day, plummets, but it picks up and goes hyperbolic. Do we have that chart?
I hope so.
I said, do we have that chart?
It's like a U.
Will
Just
said, yes,
picture
we have
a
that
U.
chart. Where's the chart?
Yeah.
There
we
it is.
go.
Yeah. Is this what Q3 and Q4 expectations are going to look like too? What do you think earnings turn out to be at the end of the year?
Well, look, this is probably where we've gotten things really right this year. Where we came in this year, we said there's going to be earnings are going to come down first because of policy, the sequencing of policy is going to be growth negative, and we were still finishing off this deceleration in AI capex. Plus the dollar was a bit too strong, and everything sort of bottomed in that April timeframe at the same time. Whether it was AI capex, the sort of burden from tariffs and the pressure that was having on revisions, the dollar was weakening at that point. So that's what's driving that. And let's not forget that companies were lowering the bar. That's what they do. Just like I talked about President Trump with the tariffs, right? He's setting the bar and then he beats the bar. Well, companies do the same thing. So that pattern is normal, is a little more extreme this time because of the dip we saw in April. Third and fourth quarter, and we've been pretty vocal about this, third and fourth quarter is where you won't, probably that's where the risk of the tariffs start to flow through the cost of goods sold, okay? So I don't anticipate that kind of a rebound like we saw in Q2.
So we will take a tariff hit in Q3 and Q4.
We should take a tariff hit on the revision factors, okay? It doesn't mean that earnings estimates have to get hammered for next year. It just means the pace, the rate of change, the second derivative could roll over for a period of time. That is a potential risk in the third quarter for a correction consolidation that we were talking about earlier.
And a risk to Fed cuts?
Well, risk to Fed cuts comes next week with the inflation data, okay? And I think this is part of the reason we sold off on Friday is that we had a really weak labor report, okay? It didn't really shock us, but it was weaker than expected. And the Fed is on hold, meaning that reaction function now is being driven by their concerns about inflation, so they can't react to weak labor data. The market didn't like that for a day, a day. And now it's saying, well, but ultimately they're going to get there. So I'm going to look through it.
It was also the revisions. It wasn't just one report. It was those really ugly revisions that I think shook sentiment as well. Mike, we're up against the clock. You've been so generous with your time this morning. Great time speaking with you. That is Mike Wilson of Morgan Stanley. Let's get a quick check on this market. We're just about 9 minutes into the session on the S&P 500. You can see breath is booming in a good way. You have more than 400 names in the green right now. 420 for a moment, and you have fewer than 100 in the red. Take a look at what's leading. This is why we're higher right now. Apple, Nvidia, Broadcom, Amazon, AMD. Those are your biggest contributors on a points basis.
5 minutes to the 15-minute candles finish printing.
Higher by about 0.6%. Then take a look at the downside. You have Eli Lilly, no surprise there. It's down 13%, taking 9 points off the S&P 500. Fortinet, I know you've been following that one, Matt Miller. Maybe we'll mention that because it's down 25% right now. Airbnb also down, despite, as you said, Matt Miller, $6 billion in share buybacks. Markets typically like buybacks, but not in the case of Airbnb. There's a lot going on there. But let's take a look at the sector breakdown as well. I think this is really interesting because you have all green, energy up at the top, tech, materials, the list goes on. Your sole laggard today is healthcare, and that is thanks to Eli Lilly, dragging the sector overall down by about 0.8%, Matt.
All right, a lot going on in this market, and there's a lot to come. Elf Beauty is getting squeezed by tariffs. We're going to talk to the company's CFO, Mandy Fields, next, as that market cap is decimated as well. This is Bloomberg Open Interest.
Gift says, yeah, I've heard proper. Josh, I just put €100 last week on my account with the 1 hour setup and 15-minute candle entry. I'm at 800 now. That's wicked, bro.
Today's CFOs are
That's
reshaping
wicked.
the
What setup was it, Ritesh?
Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
I hope you're taking out €500 out of that.
It's hard to come up with that.
Buying yourself some coins.
Responsibilities. The
Getting
need
yourself
to
some
be
crypto.
engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
We're shopping around, man.
The sentence, the hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Time now for our top calls. Some of the analyst action in focus this morning. And first up, Campbell's getting downgraded over at Piper Sandler. The analyst citing snack pressures and higher EU tariffs on the sauces. Next up, we have Caterpillar getting cut to a sell over at Citi. The industrial giant reported disappointing second quarter earnings, and Citi says that the quarter was mixed, but notes the negatives outweigh the positive. Shares down about 1%. And finally, Fortinet is getting a raft of downgrades on Wall Street after the software company gave a disappointing update to its firewall refresh cycle. Morgan Stanley downgraded the company to reflect the, quote, reset of expectations. The analyst also citing reduced confidence in the management team. You can see shares getting reset in a big way right now, down about 25%. Now, we also want to talk about Elf Beauty slipping this morning after reporting a decline in profits thanks to new tariffs on Chinese imports. The cosmetics giant is also declining to give an outlook for fiscal 2026, citing tariff uncertainty. Now, these results, they put a pause on what's been a rapid multi-year growth run for e.l.f. And here with more details is e.l.f. Beauty CFO Mandy Fields. And Mandy, this is interesting because we saw a lot of companies pull their guidance back in the last reporting season, only to reinstate this season. You're taking a different route here, actually declining to give 2026 guidance. What more clarity do you need on tariffs at this point to have confidence in saying these are the numbers for next year?
Yeah, well, thanks so much for having me,
All right,
Katie.
so 15-minute candle is now finished printing.
From a tariff perspective, there still remains a number of outcomes on the tariff front. And until we have more certainty there,
Let's just see what happens inside of here.
But what we did do this
I don't really have a clear bias for today.
for the first half of the year, since we do have
Especially looking at the SPOs, like I think the SPOs can really drop today, and if I've got buy setups, it's not really making much sense.
Delivered in Q1.
But let's just watch for now.
Have the addition of Rhode in those numbers as well, and we expect our adjusted EBITDA margins to be about 20%.
Gold's jumping.
I think is pretty solid given the tariff headwinds.
Gold's just straight jumping.
Those adjusted EBITDA margins would only be down about 300 basis points on a year-over-year basis.
Well, I'm glad you brought up Rhode and that acquisition, because one of the questions that analysts seem to have was how much is organic growth versus just the acquisition of Rhode?
Right, and in the first quarter, I'm proud to say that we just delivered our 26th consecutive quarter of net sales growth and market share growth. We're really the only beauty company to be able to deliver 26 consecutive quarters of market share growth, so very proud of that. And that is all led by our existing portfolio. Rhode will not contribute to our results until August. We just closed on that acquisition on August 5th, and so they will now be a contributor to our growth. But the growth that we've seen has really been driven by e.l.f. Beauty and our existing portfolio of brands.
That's a great answer, considering the fact that analysts were worried this was all due to Rhode. What does organic growth look like to you? I mean, obviously with Rhode, it's going to be great compared to last year, but organically, will you continue to grow, and can you put maybe a percentage number on it?
Yeah, we continue to believe that we're going to pick up market share as we move forward, as we have done for these last 26 quarters. And over the longer term, what we see for e.l.f. Beauty is an opportunity to more than double our sales, whether that be through cosmetics, skincare, or the growth that we see from an international standpoint. And so over the coming years, we do believe that we will be double the size of where we are today. And I think Rhode just helps to accelerate that.
Yeah, looking forward to watching that evolve. I do want to talk a little bit about the pipeline here, what you're working on right now. What new products are coming, and are there any timelines that you can give us?
Sure. Really excited about our skin tint that we just launched. That is SPF mineral sunscreen multi-benefit skin tint. And we've been working on that one for quite some time, and it's incredible. If you saw our earnings call yesterday, one of the beauty influencers out there, Michaela, called it one of the best products that she thinks e.l.f. has ever launched. And so you can get that now. It's $18 versus a prestige item at $48. So really still speaking to our value proposition. In fact, our value proposition is super important in this environment, and 75% of our portfolio is at $10 or less, which really speaks to consumers.
Can I ask about financing? Because it's on the Bloomberg terminal, when I hit DDIS to see what kind of debt you have out, I'm used to seeing a lot more here. You've got very little in terms of debt.
All right. We're just melting through.
12.8% WACC on the Bloomberg terminal.
I'll tell you what, for gold, yeah.
A little higher than I'd normally see for a company your size, but on the debt side, it's nothing. So
I'm going to see if we can get a pullback here on gold.
Yeah, so from a leverage standpoint,
See if we can get another leg up to take out this high.
Acquisition of Rhode on a net leverage
right,
basis to our
that's it.
EBITDA, we're still only going to be about
that's all I'm going to work with.
And so very much
Dow, I'm just going to keep an eye on it. I reckon what I'll do is I'll give you guys an update inside of the Discord, yeah?
And so we're going to be mindful of how we borrow. We've done that very responsibly over the years. And
I'll tell you what the thing is, yeah? When we opened up, maybe you guys haven't noticed. When we opened up, what did we do? Like, I'm looking at this thinking this might be a sell, but when we opened up, look how we punched above the high and instantly turned around, yeah? Look, we've had a gradual drop from punching the high. I'm starting to lean more on the side of this potentially being a sell, but I'm going to wait for a little bit more evidence. Yeah. I'm gonna play some music, I'm gonna chill, and then trade. I will give you guys updates out of Discord. With that being said, Money Day, thank you guys for joining me. I hope you all had a great time with me. And obviously, if you haven't liked already, make sure you like and subscribe if you're new. Money Day, peace.